Hi guys, I wanted to talk about the very interesting news that came out yesterday in the financial press with regards to the Daily Journal, which the money is run by Warren Buffett's business partner Charlie Munger. Munger's run money for Daily Journal for many years, and he's dispensed of 50% of his position in the Chinese stock Ailbaba, ticker BABA, B-A-B-A. So Munger's dispensed of half. Why is this newsworthy? Well, the fact that he bought it in the first place was newsworthy because he'd certainly bought it on the dip. He bought it in Q1 21, and at that point he'd taken a large number of shares in the business, and he doubled down not once but twice. So he increased his numbers twice, basically in the previous year or so, and consequently many more investors whether followed his lead explicitly or they saw an equal kind of value in Baba. People like Monish Patbrai, people like Guy Spear, people like Glenn Alexander, people like Thomas Rousseau. All of these guys bought into Baba. They didn't necessarily put the house on it, but they bought into Baba. So I guess, why would Munger be selling? It'd be great if he tells us at some point. There are multiple theories. So traditionally, Buffett would say that one of the reasons he would sell would be if his thesis was wrong. Could Mungers be wrong? Well, again, he's never quite made clear exactly what it was, apart from the fact he felt that he got more value out of Chinese stocks than he did out of American stocks at that point. Does he not believe there's so much value in it? Seems unlikely. I mean, in Baba, you have a share which the revenues have appreciated or increased, I should say, about 250% from 2018 to 2021. It has a high free cash flow yield. It's about 7.5%, I believe. You'd have to check that yourself. It's got a pretty ropey return on capital employed of about 8%. I think it's about 9%. But what it does have is some tremendous kind of tailwinds behind it. So one is the cloud, which people predict will be an area which you can make a lot of money on. Two, it's in China, and it's the core player for kind of an Amazon kind of equivalent there. There are poor people there getting into the middle class, probably tens of millions of them over the next kind of 10 years, maybe a bigger number than that. And they're all going to plug into this kind of economic system of which Baba is the beating heart of in the United States. From a value perspective, it was about $300 per share in October 2020. At the minute, I believe it's about $100 a share, which interestingly is what it was almost exactly 5 years ago. In April 2017, it was about $110 a share. Okay, so that's the spectrum. It's got a 275 billion market cap. It's growing at the rate that I described. It's got the potential to really increase the money it makes via cloud. That's probably got decades behind it of tremendous growth. So undoubtedly it would appear to be a good company. So why would he sell? So we mentioned there about, has the thesis changed? Has the story changed? It's hard to see how it could as a core business. Now maybe he's been a little bit concerned by what's happened to some of the Russian businesses with regards to the Ukraine invasion of Putin and the sanctions that have been put on Russian businesses by the United States and Europe. Maybe he's concerned that perhaps there could be some geopolitical unrest in the future which could impact Baba, and that might make the story change. It might balance the risk rather differently from what appears to be a cheap mega cap. It might be a bit more risky, maybe a reason. Many will speculate about tax loss harvesting. Perhaps he will buy it back at some point, and the reason is that, again, it's never clear, it's never easy to be precise, it would appear he perhaps paid a lot more for Baba shares in the first place than they're available for now. So they're on the market now for around $100. It kind of looks like from his 13Fs that perhaps he paid nearer to 200 for the first tranche of shares, which, as I say, doubled down on twice. So maybe he'd buy some back in the future. There was talk of perhaps he got a margin call. I believe it was reasonably well known that some of these shares, or not necessarily of Baba, but some shares were bought on margin. I think that was said in the Daily Journal's kind of meeting this year. Maybe there was some sort of margin call they needed to redeem. If you actually look at the Daily Journal portfolio, which the parts that are published in the 13Fs, we see that the Bank of America and Wells Fargo make up about 80% of the 212 million or so that they have. But we know that there's lots more, or we believe there's a lot more, which is kind of, which they don't need to declare in the same way. So Munger's always said the system is they declare what they have to legally, and they don't declare what they don't have to legally. So we don't quite know what their assets are. And this leads to a theory that perhaps he's selling some of these shares on the New York market to buy them back on the Hong Kong market. The idea being that maybe if there were sanctions, maybe not, perhaps this gives you a greater stronghold on the real business. But Munger's said in the past that it's true that if you were to buy Chinese stock, you do it via what he calls the derivative-like structure, which is the variable interest entities, the shell companies that you're buying if you buy Baba, for example, on the New York market. He's always felt that if there's a good kind of rapport between nations, this won't be an issue, but we don't know perhaps if he's looked at that. Opportunity cost always a reason to sell a stock. So, I've got different things to use the money for, maybe better things. Perhaps he's found a different company he prefers. I believe Monish Pabraya said similar to when he sold Baba that he educated himself on Tencent. I believe he said he felt that was a better bargain to be in. I think in the case of Pabraya as well, he said that tax loss harvesting was a factor. So all in all, we don't know. Very keen to have people's views on it, but the tax loss harvesting, the intrinsic value, and the original thesis. What did he decide that was wrong? Did he decide geopolitics made a difference to that? Will he buy it back? Quite what's going on. But I mean, fascinating stock. Clearly a great business. Just want to round up. Obviously, none of anything said was financial advice in any way, and all entertainment, fun to talk about. But please welcome people's opinions in the comments for why the great genius of Munger may have behaved like this. Okay, have a good day, guys.